Hi, this is Chris German from the Apartment Dealer, and with me today is Mr. Gil Figueroa. What I like to do is go out into the marketplace and interview those individuals who are the elite, the practitioners, not just spreading theory around town, but individuals who primarily are investors themselves, but are highly specialized in an area. Gil is a commercial mortgage broker, and bring these individuals to you so that they can share with you practical ideas to implement the following day that'll help you move your financial portfolio, as we like to say, your financial legacy forward. Now, Gil has been a commercial loan broker for nearly 3 decades, closed hundreds of millions of dollars when it comes to commercial loans, and knows what it's like to buy, hold, sell, and flip investment real estate. And he's here today to give us some insight into where we see the marketplace and specifically the capital markets. So Gil, thank you for being with us. Now, of course, the big buzz is that the federal government lowered the interest rate last week, and we'll get to that. But backing it up from there, maybe a bigger vantage point. Because you work with multiple real estate brokers and have an unbiased opinion when it comes to how's the market doing, right? Number one question I get, hey, Chris, how's the market? How's the market? That could be dependent. That can be very subjective in the sense of if I'm busy, I feel like the market's doing great. If my personal business is slow, hey, maybe the market's turning, right? So it's subjective. For you, though, you have multiple brokers coming to you, have a bigger pulse. Number one question is this market that we see now in terms of transaction volume, purchases versus summer of last year. Is it, would you say, the same, more, less? And if you had to put your pulse on why it is one way or the other, what would you think it is?
Well, Chris, I'm blessed enough to be able to work with the top agents in the area, in all of Southern California. And they're pretty busy all the time. But we have noticed a drive this summer that we didn't have last summer. And that's because I believe the rates have lowered and making cap rates and interest rates more attractive.
Do you feel that's having some effect, or it's the little bit of steam we needed in a market that seemed like it was lagging? In other words, it seems like we've been trailing sideways price-wise for some time now. And with this hope of interest rates, when there seemed to be no other hope, rents seem to be as high as they're going to go. We have push buyers tolerance. Would it be a fair indication that interest rates are a part of that steam that we needed?
Oh, absolutely. 100%. 100%. People are motivated to get into these terms and these rates. I mean, we have rates as low as 3.5 right now. Most of the buyers are picking longer term rates, maybe 7 or 10 year financing, but they're definitely motivated to be able to capture this market as far as rates are concerned.
I think, oftentimes the investors themselves, and again, going back to a purchase, maybe speak more candidly with you because you're handling their loan side than say me. The investor, the buyer, comes to me and they want the deal, right? So they're telling me everything I want to hear. It's all rosy. You're behind the scenes. What would you say, where is buyer sentiment at this point, investor sentiment at this point? The psychology behind what's driving them to do or to perform what moves they are making?
Well, what I'm seeing is the investors are very fine tuning their market and they have a game plan. They're bringing game plans to the table. A lot of their game plan includes getting rid of non-performing assets or assets that just don't have tremendous upside. So I am seeing some trading into a C class versus a B class, or upgrading is I should say, upgrading in today's marketplace. They're also fine tuning their spreadsheets. I'm not seeing speculation buying. I'm seeing buyers that are really taking time to understand where that deal is. They have a game plan. They either have an agent or have the experience themselves to come up with a game plan, and then they're executing. And these buyers are definitely forced to execute in this marketplace, and that's what they're looking at. I don't see any flimsy buying. I'm seeing buyers that are smart, that know what they're doing, and have a strong game plan. Execute.
I agree. It's a different buyer pool right at this moment than say 6 months ago. And so I would agree to that point. Now, shifting to interest rates. Obviously, the Fed, big news, Fed lowered the interest rate last week. Not many people follow this as closely as you or I do. So the assumption could be made, maybe true or false, we'll let you answer that. But hey, if the Fed lowered rates, that must mean all interest rates are going to go down. And vice versa, if the Fed were to raise rates, that must mean all the rates are going to go up and follow suit. Is that not specifically to this current interest rate move that they've made, but in general, is that always the case? Fed goes up, things go up, goes down, or is it not, has nothing to do with it?
It it really the fact is it's true. It does move the marketplace, but it is a futures market, so it's much more attuned to what effect the Fed is speaking about for the future, whether they're dovish or aggressive. So that's what the futures market always relays on. So sometimes when you have an interest rate cut, rates actually go up because the stance is maybe this is all we need at this time. Okay, so it's not necessarily a trend changer per se.
Mhm. Anything you can tell us? I know we only have a few days of data. Obviously, the stock market did not like the interest rate when it first lowered. Um, if I'm an apartment investor with just a couple days of data, what should I know given the current interest rate move?
The current rate has dropped our treasuries from October with our forecast when we mentioned that rates would be lower. It's dropped from 3.25 on a 10-year treasury to 1.66 today. So that's a 50% drop. It's a huge drop, but it's also a fundamental drop. And what we mentioned the other day per our conversation is we're at an epicenter in the marketplace where rates can actually either go way up or go way down. So we're at that inflection point right now. So we're in an interesting marketplace. What I'm advising my clients to do at this moment is not be greedy. If you can get a 3.5% rate on an apartment building, it's something you have to take.
Oh, sure.
It's something you have to move on.
And to that point, to give some perspective, 4 months ago, everything had moved above 4%. There wasn't very many banks that were offering anything less than 4. So it seemed like, well, welcome to a new market. We were quoting all deals pretty much like at 4.25, just to be conservative. Now we're talking about 3.5. So maybe, good times are back. But like you said, for how long, or is it necessarily the case that they'll continue in a trend one way or the other? Now, we have our educational luncheon coming up in October. If you've never had the opportunity to attend, this is where a couple hundred apartment investors and owners just like you come to a private venue. We keep it small and intimate so that we can answer your questions, speak to those items that are currently impacting the ownership of multifamily. Gil Figueroa will be one of the many speakers that we'll have with us. I realize a lot of things can happen between now and October 3rd. So not necessarily laying out a prediction, but because we will have that much more data with us to review, if I'm an apartment investor, I'm busy, to come to our luncheon, that means I got to either miss work, get a babysitter, what have you. Why should they be in attendance, specifically because of what you look to share with them?
Well, the last prediction in October was a 50% drop in the bond yield, which caused over a 1% drop in interest rates. So we were pretty much at 4.5. Now we're talking 3.5. I'd say that's pretty valuable information. If somebody would have basically played the market and refinanced or purchased at the right time, they could have saved a tremendous amount of money. I curtail that we're at that epicenter of a change right now where in our meeting by October, we're going to have a forecast. We're going to have a trend direction. And that's my key. Also, one thing I want to mention, these astute investors are having a very defined game plan. And that's what your team does as well in conjunction with me. So the game plan is very important. I think it's imperative that they show up.
So coming this October 3rd, we will be in the city of San Gabriel. The RSVPs are not open as of yet. There'll be more information either coming via social media or direct mail. We hope that you'll join us. There's not because it's our event, but truly there's no event that I know like it in the marketplace that helps, say, what are called mom and pop investors, or those investors who say hover between owning 5 units and say 100 units. Different is you go to other big brokerage house seminars that they share, and they're speaking to individuals that own thousands of units. It's not really particular to your situation. We get real granular here, very micro in terms of the local marketplace. We're speaking to areas in which you own, because the invites only go out to a specific geographic area, and the information that Gil will share and the lawyers involved and all the other financial experts that'll be with us. Again, they know what crowd they're speaking to, what information to bring, And it's very short and concise, and in one-stop shop, you get everything you'll need to know to carry you through for the following 6 to 8 months. Gil, thank you for being with us.
Thank you, Chris.
This is Chris German from the Apartment Dealer, and as always, I'm wishing you positive cash flow, tenants who behave, and much protection from Uncle Sam. Thank you.